Decoding this IPO and the recommendation. Joining us is Tapan Doshi. Good afternoon, Tapan. What would be your views on the company and your recommendation?
I should no, as you rightly said, no, this business is not having so much of moat and no, where much more of fragile business. And you see, the top five clients constitute almost no 49% of the revenue, and there are some government entity also in that. But the main problem lies with this no companies that no they have a negative cash flow. The reason is they high to debt equity ratio. If you see the net debt is almost 14.6 crores against the net worth of 12 crores, which is on a higher side. Their interest cost is higher, and that is why their operating cash flow is getting negative. Now if you compare with the competitors like Teamly, Squarescrow, no, they are having a positive cash flow. This company is having a negative cash flow. Again, debt to equity also, their competitors is much more favorable position, less than 0.5, and this company is having a much more higher. So all this is negative. Again, there are some of the other risks I'll talk about is that the regulatory risk is there, potential labor law compliance problem is going on. Again, cyber security risk is there because it's an online driven HR solution. A lot of data privacy and security risk is there. Again, verification also because of lot of volume. There's our complaint no, that they are not doing a exhaustive background checks also. So again, competition is much more. So looking at all this, even the debt equity ratio on a higher side, I think this is a avoid from my side.
Okay, so avoid call coming in when it comes to Happy Square. Also, the second company in focus is Cyrogenic OGS. The merchant banker is Beeline Capital Advisors, and of course, this company is having some concerns, and especially this is having exposure to a cyclical gas industry. Of course, the capex cycle over here is cyclical in nature, high working capital business, and interestingly, 57% of revenue is just coming from two products. These products are metering skids as well as eliminators. However, there are certain positive also, and as per our analysis in the RHP, they have blue chip PSU and MNCs with almost 90% of return business, and the margin profile, if you look at it, it is still strong. Tapan, how do you view this company and what would be your recommendation?
Yeah, as you told, know that their two main products are actually metering skids and illuminators, which is almost 57% of the revenue. Their top 10 clients contributes 89% of the revenue. Okay, and that basically, if you see, their concentration is in mostly in two states, Gujarat and Maharashtra, from where they are getting 82% of the revenue. Of course, it's a cyclical business, but there are some positives which you have to check it out here. Is that they have strong proprietary design capabilities certified by global inspection bodies like DNV, SGS, Lloyd, so which is a good moat as such. Their margins are quite good. 18% PAT margin is there, 25% EBITDA margin is there, much better than peers company. The peer company is around 10 to 12%. Even debt to equity ratio is almost zero. However, typically in this industry, it's almost below between 0.5 to 1. So that is also good. Again, their clients are almost blue chip clients and multinational clients. Almost 90% is the repeat business. So there are good positives also. So I feel looking at the valuation, all that there may be a listing gain, but as it's a SME IPO, one has to invest based on their risk profile. So I'll be cautious in this IPO. But yes, this is my take.
Tapan has a view of being cautious for Cyrogenic OGS. Thank you very much, Tapan, for joining us and giving your views
Thank
in
you.
this SME IPO.